Yeah. So what I so where I have I have that thing working in the background. I've had this machine at this. It's like an idiot. I'm using the older, slower machine instead of my screaming desktop. It's just so fucking stupid. I thought I'd just offload it to the slower machine. That turns out to be dumb because I'm about 2 weeks into that project. I've moved from 2,500 videos. I'm now down to the last 300. So that thing's moving right along. Well, so we're at about 300 or 350 million curated words in the AI assistant coach. So I was helping some academics with they're trying to establish a new integrated cross-functional academic conference to study things. So I said, well, you got all these different ideas. You need to come in with the 10 lessons that a freshman student needs to know for orientation so they can start getting their arms around this stuff. And then I realized in a blinding flash of the obvious, I need to do the same thing. So I put the question to the AI today. I said, give me the first 20 concepts, scan the whole thing. Give me the first 20 concepts in a logical sequence that you recommend that a new trader or a trader that's new to our work, because that could be two different things. Give me the first 20 steps that a new trader uh, should learn to some level of like a journeyman level of mastery in order to start moving through the body of knowledge. Uh, so it turns out you can make that as a report, a custom report in Notebook LM, and it will drive itself to producing complex processing and reasoning for you. If you put that just straight as a prompt into the chat box, you'll get an answer in about 10 to 30 seconds. If you make a custom report out of it, that some bitch took 25 minutes to think its way through that, and it came back with about a 25-page, one lesson per page, uh, detailed explanation of the concept. Like the first one it picked was the zero state. It determined that of all the 350 million words that have been spoken, the single most important concept in the whole stack was the idea of the zero state for trading. And then it gave a breakout. Well, what to find it? What are some ways you can get there? Why does it matter? How do you know? How do you stay there? How do you increase your endurance to stay in that zone? Some references and readings for follow up into a densely packed one-page lesson plan. Let's see, a lesson resource for what's going to be lesson one in this new foundations course. And then it picked plan, prepare, execute, assess as concept number two. And so then it built out 20 lessons in logical sequence. And what was very interesting was that only about three or four of them had anything to do with a specific trading technique or pattern. Now, it did say owl trading and sniper framing and the compound critical state, but it spent a lot more time on foundational things like how to organize your time and your workspace and do systems thinking and process management and um, assessment of your performance and statistical process control, continuous improvement, all of the support functions that go into the management of a system or multiple systems. It found that was about 70% of the 20 lessons, which I thought was pretty fascinating. I So having done that, I then said, all right, now, smartass, give me a report on the top 100 specific skills, like a job book. Like, I can operate a drill press. Okay, that's one of the 100. Whereas proficiency with power tools and safety, that might have been one of the 20 lessons, which is a compound collection of ideas. But I said, so now give me the next level down, which is 100 specific skills and tasks. And it broke that out in, and that was in the form of a report. And thought about that for 30 minutes. And I said, and as part of the report, I said, give me at least 10 logical groupings of that. So it did. And so now it's built a nice little job book of the 100 skills, the 20 lessons and the 100 skills. And boy, it kind of cut through all of the kudzu, cut through the brush to make this path. So I'm going to make that stuff available to you. And it looks like it's in the form where it says, here's the skill, here's how you do it, here's why it's important. And it's built, I can put that into the form of a job book and a self-assessment pretty nicely. So um, I should have that ready for you by Sunday. I gotta do a little bit of monkeying around with it, but uh, I feel like we've gotten to the critical mass on the content in there. There's so much good support material for process management and psychology and time management and critical thinking, creative thinking, and it really likes the Fletcher primal intelligence as well. I think today I started a 7-part series on Fletcher's primal intelligence, uh, what it is and how it relates to trading. It's very strongly connected to creativity. So it has 4 elements. It has intuition, imagination, common sense, and emotional resilience. It says these are the 4 primal intelligences that are hardwired into your brain that collectively create our um, evolutionary advantage, along with our tribal affiliations and opposable thumbs and fine motor control and a sense of the ability to do delayed gratification and a sense of time of now and in the future so I can imagine a future state and test scenarios before I commit to action. And if the tribe can give me some protection while I think about it, then we can come up with better strategies than just using our brute force and ignorance against our enemies. Because it turns out that our brute force is not as brutal as other carnivores, and we're slower and smaller and weaker than our target herd animals. So we got to somehow use the advantage of our brain and tribal affiliation to win. So Fletcher's intelligence is that those 4 primal intelligences, they operate in that sequence. First one is the intuition, and so the intuition turns out to be connected to the trader quality number. It's the maybe pre-rational or sub-rational moment of insight that you get, that it's the aha moment, the spark, the quick flash, um, that comes from deep processing and knowledge, but it gets nominated into your brain by things we still don't understand. Like, why did I have that idea? Who chose that idea to stick into my head? I mean, I know it when it's there, and I start thinking about the idea, and it probably took a couple centuries for humans to say, now, wait a minute, where's that idea coming from? And why that one and not the other one? What's who's pulling the strings here, you know? And is there something going on inside me that I'm not aware of? Who's setting the agenda? That's it. So um, the work on intuition seems to be connected to our pattern matching brain. Like we get some inputs and we're running through this card deck of things. Does that situation look like this template? No. That one, that one, that one. So as you gain experience and or education and practice with it, you have this like a handful of cards or frames or lenses that help you categorize situations into typical kinds of problems. The same way that we look at price moving and we say, hey, that thing it failed to fail further. It's starting to consolidate. It has not yet, the RL10 hasn't reversed positive yet, but it's close. You can feel it coming. And so you can start picking the ones that look like they are candidates for the next emergent pattern. And then as the pattern confirms is, of the 10 that I have, it looked like these three and it's narrowed down to two. Now it's this pattern. And now maybe that's enough to act on. So deep planning and preparation seeds your brain, preps it to be ready to map to the incoming signals. And intuition is that sort of rapid gestalt, the expert awareness that, oh, these things are coming together and it's this one, and I feel that. It's like trusting your feet in soccer or trusting your hands in the machine shop. It's not just random chance. It's actually built on a foundation of a lot of embodied awareness, the total body, total mind awareness, not just the abstract rational thought, which we are accustomed to thinking of as my primary brain. It turns out this deeper embodied brain work is really important in most things that we do, especially in craft work. And so the first stage is developing that intuition, which it looks to me consists of uh, practice 10,000 case studies. I think that's about when I first started becoming proficient in my own trading was 10,000 case studies. And if you do five a day, that's 2,000 days, and that's 7 years. So after about 7 years of doing five a day, you're probably at that 10,000 case study threshold. The guy who practices one move 10,000 times, so to speak. So the intuition tells you something about the current state, and you're looking for insights into what happens next. So, especially at turning points, you start seeing things that give you a hint that the turn might be starting to develop, like the first stages of spring. You know, the light is getting lighter a little earlier. The rain is a little different. The birds are flying or whatever. So you start gathering all these signs. And that's what the intuition seems to be. When the intuition is a preview of coming attractions. So the next primal intelligence is imagination. And now your imagination consists of how many different scenarios can you scheme up at once and hold within your head or rapidly filter through so you can start testing multiple scenarios. Is it like this? Is it like that? Maybe if I'm organized and I have a process to go through, I can actually train myself to rapidly develop a scenario, evaluate it, and move on, as opposed to just blundering around in my own head, waiting for an inspiration to come. I can maybe have a practice that reliably produces separate, feasible, suitable, acceptable, and distinct trade frames. Or I could take the 7 questions of trade framing and rapidly evaluate an opportunity to see what I actually think about it once I put a professional process onto it. So imagination now is the ability to scheme up all these different. Well, if you can then classify those and say, hey, most of these things look pretty good, some look great, and only a few of them look bad, and I can protect against the bad ones with my initial stop. I can now get an asymmetrical return profile for the amount of risk that I'm taking. And now you might find yourself in a compound critical state where you can get asymmetric rewards for a measurable, manageable risk with enough frequency that you can turn this into a robust system. So that's what the imagination is doing is can I take the pattern that I'm thinking and then turn this into a movie trailer at warp speed and see, yeah, that looks like it could work, and then that becomes your plan, your chosen plan with some decisions and choice points. And then you're into execution when you've shifted the mind state away from thinking about it and getting into ruthless execution. You're playing the game now. Stop goddamn thinking. It's not good for the ball club, you know? And so the execution takes a different mindset of being able to trust your hands because you're confident in the training and the prep that you did. It suppresses that part of your brain that second guesses you, your gut, which says, hey, I'm not ready for this and all that. Sometimes you're not ready for it anyway. And your brain and your heart and your hands and your feet say, shut up, we're into it. We got to go now. I don't have time. There's exactly no time left to worry about it. I got to start swimming or I'm going over the waterfall. So there's no, the gut says, yeah, yeah, you know, you're right. I'm going to pitch in and add some desperation into your swimming. So let's go. You're at your most aligned and organized when you're fighting for your life. It takes everything you got. That's why when you're done, you're worthless. You're used up because everything was committed to the execution. And then the assessment mindset, you know, well, so in Fletcher's intuition, then you're setting the first hint that this might be a thing and selecting a few things to consider. The imagination to rapidly frame it and find one or a set of them that look like they are standard plays and could work. Then common sense, which does the risk management to ensure that this thing is not only suitable and might work, but that it is workable within a framework of manageable risk for the reward. And now you're building out the details of the plan and looking for hidden risks and safety limits so that the good idea, if it works, handles itself. The common sense piece is the thing that prevents disaster and comes in and gives you enough insurance and safety measures to keep you safe and professional, which allows you then to execute well. And then the last piece is emotional resilience. That's the fourth primal intelligence: intuition, imagination, common sense. And then finally, emotional resilience, which says this is a journey of 10,000 steps, and every one of them is hard. And you get tired at times, and sometimes things go against you. And if it's 10,000 steps, you're going to see some fat tails. So you better understand something about the law of streaks, the theory of streaks, so that you become prepared for what the probabilistic nature of trading is likely to give you over extended periods. And we're bad at fat tails in the same way that we are bad at the exponential function. We cannot really reason beyond uh, five variables and a couple iterations. We just are not able to have a reliable estimate of where it goes. It goes certain. It's like we're geared for the next five steps and no huge changes. But beyond that, we're kind of helpless. And so, one of the interesting case studies that talks about that is a stats professor who said, uh, "I want you guys to do the following experiment. I want you to write uh, heads or tails for 100 coin flips, and I want you to do one of the two following things. I want you to actually flip them 100 times and simply record what they are, or you can manually imagine what it's like and you just put together your brain's patterns of heads and tails. You do and fill up a page with 100 things that you think are random heads and tails. And he says, I will, and then you record that, is seal it, whatever. If I can trust you, you can just, if I guess correctly, or if I guess incorrectly, you'll get an A for the course. If I guess correctly, you got to promise to do all your homework and pay the fuck attention when we're talking. And the guy never failed. And the reason for it was even in a sample size of 100, we're not really prepared for the appearance of long losing streaks on a 50-50 coin flip. And what was happening was that people were doing heads, heads, tails, heads, tails, heads, tails, and they were doing those little things. And they never really got beyond three uh, in a row of either heads or tails. And so the lack of longer losing streaks or the lack of longer streaks in even a data set of 100 showed that it was non-random, that it was human factor. So even though there was only two, and you could say it's probably a coin flip about which one they picked, it really wasn't. It was their brain was not working as a genuine random coin. It was operating off a magical pseudo belief in what randomness actually means. And so the longer the sample, the more reliable it was that the human could not come up with the streaks. So I thought that was bullshit at first. And I said, no, it's probably right. So I built a spreadsheet that did that. It tested uh, streaks of 100, 200, 500, all the way up to 50,000 coin flips. And it would count, it would generate random numbers all the way through there. And then it would summarize the numbers of streaks of different sizes every time you would refresh the spreadsheet. And you could see what it was. And it was like, when you run 10,000 or 50,000, you get streaks of 25 in a row. And you wouldn't think but that's actually, now if you did the binomial distribution, which is a coin flip, and you find out what's the probability of getting a streak of 25, it's ridiculously, not ridiculous, it's statistically small, but non-zero. And when you have a large enough sample, you're going to see that stuff. So I say all that to say that the assessment phase of plan, prepare, execute, assess is really, really important, and that it helps us understand something about the world we live in that is very, very frustrating and creates emotional resilience. It needs emotional resilience in order to deal with it, and that is, why is the goddamn world so persistently obnoxious to my rules? I've done all this work and back testing and prep work, and I got my rules, and the motherfucker still finds ways to remind me that this is why we play the game. It's sometimes that other some bitch wins, and he shouldn't, but he does. It's why we play the game. So I say all that to say that among the last 5 or 10 million words that I've added uh, to the AI coach is a lot of things down in that vein. Systems thinking, math models, statistics, probabilities, and gambling, and some the logical fallacies, the Fletcher primal instinct. So I'm really satisfied with the 20 tasks. There was nothing on there that offended me, and of the handful of things that I wrote down before, I said, "Man, I'm going to give it to it," but I'm going to be, and I just made a little sample of about the first 10 that I thought were really important, independently, just using my own head. And all 10 of mine were on that list. And the other 10 that it offered weren't stupid, and the sequence that it offered was actually pretty good. I think like number 20 was make sure that you are connected to a accountability group of similarly trained traders, but who are independent enough that they have fresh ideas, but are committed to group action in a way that is satisfying and helpful. I said, okay, that's legit. So anyway, by Sunday, I will have the field guide to those 20 lessons built out for you in a Rizuku course, and I had a nice little handbook, 1 page per lesson, as a quick reminder, and then the 100 skill job book. And as soon as my bulk writer resets, uh, I consumed all of my bulk writing stuff in one day, early September. I will add those. I'm going to have it write an essay about each one of the 100 skills with references, so that it builds us out a operator's manual for for tortoise trading or whatever. And I'm pretty happy um, with that work progress. Um, it is astonishing how much work I'm getting done now that I'm not fucking around in the Army office with the fellow Army mules that I'm working with. They had the nerve to send a chat message and a text message out to the team saying, hey, we're working really hard to get the exception to policy to allow you guys to come back to work for no money. And I'm thinking to myself, hey, I don't want you, don't pull a muscle working hard like that on my account. Go ahead and take care of your stuff and just leave me the fuck out of this. But you got to be careful how you communicate that, because you want to be a team player. But I do have to say that I've been keeping in touch with my students and feeding them goodies along the way, and so they have an advantage over their peers. They kind of like it this way, you know, because they have an unfair advantage, and then they don't have to listen to me for hours at a time. You know what that sounds like? What a pain in the ass that is. So, so there is that. Hey, I wanted to share. I wanted that's sort of my check in. I wanted to share with you real quick before I forget a one of the quizzes. Um, let's see, screen two. Yeah. Yeah, let me know when that can let me know when you can see that. All good?
Not yet.
Yeah, it should be there
There we go. There it
any
is.
second.
Yep.
Yeah. Yeah, so this is just I was thinking about Chinlong when I did this one. Um so this is Caterpillar, and it's a 9-day chart. And so that means this is the RL90 right here, this green line. So on a 1-day chart, 3-day chart, and a 9-day chart, you got the RL10 is the price on a, and then the 30-day or the 30 bar is the health of the trend, and the 90 is the health of the next higher trend. So when you start looking at the 90 bar regression line on the 9-day, that's looking at the trend of 810 trading days. So that's like a 5-year moving regression line. And when you get this, the 30 and the RL10, it gets to a maximum excursion like that. You also notice that the maximum unfavorable excursion was here, and it took 3 bars to move from about 270 to 325. So that's $55 on 270, which is about five. Yeah, that's uh, that's a 20% move off the low. And here's where the RL10 reverses. The RL10 on a 9 day bar is the RL90 on a 1 day bar. And the RL90 is the strength of the next higher trend. So when you get a change in the slope on the RL90, you better pay attention. Look how good that sumbitch is. And here's the rule. Bob Rourke and I were looking at this and we said, look, on a 9 day bar, the RL90 is king. When the slope is positive, you should be long no matter what. When the slope is negative, you should be short no matter what. And when it reverses, you have a major inflection point. So this is the let's see, 2025. This is the Trump dump, which went from 410 to you know to 290, where the RL10s turn. So we actually got in Caterpillar. This was a really strong Godzilla play, and this is where I got a swing entry, and I'm simply using. I was using a 1, 2, 3 entry, and I even went wider than I had to. This is where the stop needed to be. You could get away with a $25 stop right there, buying on a $325 symbol, and that's 1/13. And you could call that about 8%. So with an 8% stop, and you could call that $25, that some bitch has never looked back. And that has offered something like, this is where it is. That's where it was today. And each one of these is like the Hogard press. It's like, because why not? As long as you're seeing like rising lows, you're okay. This was the only test, and the RL90 never flinched. The RL30 was still rising. We still had some cash in there. Even if you get out here, your reentry is right around in here anyway. And since it's already cleared all previous resistance, you could put all 3 or 4 right back onto that and then just continue to march. So, with that strategy, this is sickening. This one is holding 10. This one's holding 9. This one's got 7. This one has 5. This one has 4. And this one has 2, which gives you 11. Let's see, 11, 27. That's 37R right here. So if I want to keep If I want to keep 70, so if I got 37R, let's let's just call it 40R, and I want to keep 70%, I got to keep 28 on one, two, three, four, five, six positions, meaning each loss of 1R is -6. I basically, this would keep 70% of the open gains. This one would keep 80% of the first gain. So this one would represent -12. So I just go -6, -12. So I go 37 -12. That's only, even this stop right there is only keeping 67% of available open gains. So where I really need to, if I want to keep 70%, I need to have my stop at 570. And and every R that goes up is another six. And there's no, this is an all-time high. And you say, who's going to replace Caterpillar? They can make tractors and battle tanks. And if you don't think that they could make robot anti-drone weapons platforms, you'd be wrong. So Caterpillar is like Ford Motor Company before they got stupid. Caterpillar may be the most important alternative manufacturing except Tesla. What does Tesla do? Well, Tesla has energy, AI, the mega factory, it has space, it has Starlink for command and control. Um, that's and it has robots. It uses a mega factory, which is a robotic factory that can make robots. So you want to talk about a second order effect. So Tesla and Caterpillar are actually America's military. That is the military industrial complex for ground and submarines. And oh, it's got rockets. Oh, he's got rockets too. So he could replace the entire Air Force too. Now, if you're stupid, you would chase Elon Musk out of the United States into the waiting arms of every other nation in the world that wants a successful military force. I will conclude this remarks by saying Tesla is not a car company, and Caterpillar is not a tractor company. And the 9 day bar is all you got to do is measure the difference between the RL90 and the maximum adverse excursion, and then put the stats on that. And when you find an excursion that is greater than Z -2 in that direction, then you look for a 1, 2, 3 entry, or uh, 20% off the low with an 8% stop. And then you run that on every symbol in the S&P 500 and probably the S&P 1000 and all the ETFs, and you will never be on the wrong side of that trade. And then pay attention to the slope of the RL90. I'm telling you, that is the Rip Van Winkle trade now and forever. Now, Chen Long, this is why you need to pay attention to this. This hit me in the face this morning like a wet fish. So you got a population of symbols in your universe of tradables, right? You're tracking those things for BMR. And then every month, month goes by, month, and every month you go down and take a sample of price performance and you say, "Oh, here are the three symbols that are doing the best. So I'm going to own those three for the next month, and as long as they are leading the herd, I'm good to go." Here's the problem. From the time that this thing sold off, you could pretend that thing was the worst thing. Just pretend for a moment that was the worst thing ever. By the time it does this, it's relative. It has moved from the absolute back of the pack up to the front end, and so you'll get the follow through while it is the leading candidate, but you miss the first half of that move. But you give back the asymptotic sell off when that thing reverses. What this little strategy will do is give you a fighting chance to capture the first leg, and then this is where the BMR picks up. So we're calling that the PBMR, the pre BMR, or we called it, I think Bob called it the BMR regression slope or something like that. But the idea now is that um, when you have your little stack, so if this is the average, and if this is plus one, and this is minus one SD, so you have category three or four, three, two, and one. BMR always gets you into the front runners for as long as they can continue to front run. And that's about 1/6 of the data is up in here. And about 1/6 of the data is down in here. And about 1/3 and 1/3 is in here. So this little turning point is how you get the initial. I consider that to be a pretty low risk trade. Here's here's what you should notice on that. The extreme sell off that already reversed pretty hard, higher open, higher lows, and then a 1, 2, 3. And this one had declining volatility. The key bar on this whole thing is that one. Look at the size of the range compared to the previous sell offs. It's a third of the size. 2/3 of the volatility disappeared by the time this run was done. So now you actually want to start classifying the range percentage of your 9-day bars to determine when you have an outlier bar followed by a super quiet bar. Now your 1, 2, 3 entry is good to go. Done. That's how hard you got to think about that. The statistics will not steer you wrong. So, in conclusion, what this idea will allow you to do is then use your regular trade framing to go back to things like um, previous peaks. That's just an emerging dragon. This is like an R10 wiggle. The slope of the RL10 never even went negative there. So you could hold that all the way through, or at least re-enter here. And then this one took out the previous bar's high, and this one took out the previous bar's high, and you still got rising lows. You could just lather, rinse, and repeat that forever. Hey, so what if this thing was a new bar and it was here, sells off a little bit, and then goes to here? I guarantee you I'll add another position right there. And I'm using the accumulated market's money to keep pushing that some bitch higher. Now, what you got to do is you got to take a look at all of the elements in your herd and say, what's the maximum heat that I can allow per position? Because I don't want this to become so successful that it now is taking up that much of my capital. Or, but although I will tell you, that's how JP Morgan and John Paul Getty became winners. That's where you get the generational wealth. The portfolio heat might talk you out of genuinely asymptotic returns like Palantir. So you gotta with this model in mind, you got to think really hard about how much concentration do you want, like four positions, and maybe 50% maximum exposure to any one of them. That is the most aggressive form of that I could take, and that's not far off from BMR. There's some possibilities there. Now, here's what's even better. You can, if this was what the 9 day looks at, I will guarantee that there are places inside here where if you drop down to the 3 day, you could get some 3 day turbo on a 9 day core in Caterpillar. And it would take you approximately 20 seconds a day to decide what to do with that position. Or you could just have that trailing that trailing keep 70, where the keep 70% is legit is when you start stacking up multiple positions and you want to keep 70% of the capital and not just 70% of the first position. This number here is 70% of the first position. But when I start adding these multiples, 70% of the open capital is up there. How much I can afford to give back because I got six positions. The other side of that is if it gets to the point where it's taken too much heat, you say, hey, what I got to do is I'm just gonna cut that off right there. I'm gonna sell half the position, and now I'm gonna calculate my keep 70% from here. But I'm gonna keep 100% of this, reduce my position size in half. Now I only got half a position going forward. But that allows you to you're talking yourself into giving back more negative price action because you have a strong belief in this thing. I'll tell you that once you're past the previous all-time high, don't fucking do that. Just keep 70% of the open risk or of the open gains, and you will continue to have a large position size going forward. And then I think I would do on portfolio heat, you decide whether that's 10%, 20%, or 50% in anywhere from 4 to 8 positions. And then that's your long term strategy. Now you're safer if you do that with the larger indexes, but at some point the larger indexes all almost look the same. Long term the S&P looks like that, the Nasdaq looks like this, the Dow looks like this, the Russell looks like this, but the slope is all pretty constant. I think as you start moving further out, it might just be the market itself, and that's where you can add things like treasuries, currencies, real estate, uh, that kind of stuff. So anyway, that should give you plenty of things to think about for your long term and where this stuff can go. It was just too important not to share that with you, and I wanted to get it on camera before I forgot. All right, that's my check in. Uh,
Hey,
yeah,
can you
yeah.
clarify the first entry? How do I entry here? The first entry?
One, first one.
Yeah, the first entry. What is the rule?
One,
Do
two,
I?
three, one, two,
Okay,
three, and I was late.
okay.
And I'll tell you why. I was intraday and swing trading this sumbitch with really tight stops, and I made good money on this in here. But there were a bunch of false starts, and then once it started going and started to just calm down, I kind of lost sight of it, and I should have kept a larger position off my initial. You know, what I've learned how to do is have about four buckets where this is like the 9 day bucket, the 3 day bucket, the daily bucket, and the 30-minute bucket. So when I'm up here turbocharging around and I tell my position, I kind of like send 10% back to him. And on when I forgot it, send and just start rolling that stuff back. So this position is bought by pure gains from all this. So I got like, dude, this is legacy. And that way you always kind of have low risk positions in blue chip areas that are keepers like that. Like I have a belief that Palantir is not going to go to zero. I've got I've got a number of shares in PTIR that are fully funded with gains, not the risk cap. The entire share was just given. It was just given to me by the market. Here, you have it. That's all. Okay, fine. And so those are the ones that are in my wife's account, and I'm not ever going to sell those. So, uh, yeah, her account is up 1,000% in 2 years, and mostly because of the focus on Palantir. But I could afford to do that because, as a percentage of total portfolio, I could afford 100% heat on her account, um, because it was a fraction of the total account. So, um, yeah, so I looked at that as a one, two, three. You would not be wrong if you wanted to drill. If you saw the 1, 2, like the 1, 2 made this really attractive because you had the big sell off and it had the higher low. The close or the open was higher than the close, and it closed near the top of that thing. So I was ready to go here, but I monkeyed around and only got it there. I was too slow to recognize, and I finally established a buy and forget about it and using the 9 days strictly. And then you just get used to the things like, oh, higher lows, and here's a doji. This was an important moment, and it voted to the upside. Notice it gets to here before it even does the PSAR flip. That's where the official SSC is happening here. And here's where it does the PSAR flip. This is the RL30 PSAR. And then this was the emerging dragon off of the swing high. And then this one held support by the RL90, and that wasn't bad. I could live with that one. And then the re-entry here. This one I thought was important because when you get that inside bar, narrowest range of the last four bars, then the breakout from that is interesting. The breakout from here is high. That's about a 30-day breakout because 4 9 day bars is almost a 40-day. So this one is key. That's the one you got to hold your nose and say, man, this thing just moved from 290 to 450, this Caterpillar, how much more could there possibly be? Oh, oh yeah, a lot. So yeah, the 123 entry on a 9-day bar is pretty solid because you think about that, that had to be like the highest high of the last 20 days. That's like a 20-day breakout. And you should have no trouble finding a reasonable stop that's well out of the daily noise. Okay. All
Yeah,
right. That's
thank you.
everything. That's everything I wanted to cover on that. Let's get over to you guys. Who's up?
I'll get going. I got to cut short here pretty soon, but still trading along. Looking at my daily 401k process. Now that we got a little bit of pullback, I'm kind of stalking a potential reentry here in the next couple of days. I don't know if I'll get in before Friday, but potentially if we get a trigger. But what's interesting, and the great late Dr. Van Thorpe is rolling in his grave, because I realized today that as I'm watching charts and I'm looking at getting in positions, when things get kind of critical and they get into that critical state of whether it's going to go up or down, for some reason I find this really odd desire to get up and go do something else. There's something else that's more important than sit down and actually watching to see what happens. And
Yeah.
so there's an emotional piece in there that I've discovered. Let me phrase that. I've identified. I haven't discovered it yet, so I don't know what's driving that, but I've never noticed that before.
Try this.
Always.
I have experienced exactly that. Here's how I solve that one. Trade at 1/4 of your normal size. Commit to the red line to go short and the green line to go long, with the space, the yellow zone being your risk, a full 1 hour risk. Trade that at a quarter size of what you would feel comfortable with if you were watching it, and leave it, walk the fuck away from it until the bell rings, and then you wonder which way it broke out. And
So,
completely offer that to the monkeys of the world. What you're doing is you are conceding the yellow zone to the first mouse and the monkey. You say, you guys decide which way to move it significantly. Here's how I learned how to do that one especially well, and that was in the bar by bar trading with during COVID. There were a couple sessions where I was really working Ken Hum very, very hard, and live and on camera, and uh, he would frame a trade according to a standard pattern, and it would work, and then he would exit, and then I would say, "All right, what is your plan?" Immediately, and he would say, "Well, I'm going to study it and see what happens." I said, "No, you're not. You're going to answer the question right now." And so what we did was, uh, I said, I'm going to start where the price is, and I'm going to start moving, and I'm going to go to the next bar, and I'm going to start going down, and then you tell me where you're confident that you would go short. Red line. I said, now step back. Now we're going to start moving the price up, and now I'm going to keep moving that price up until you tell me that you feel like you have to get in. Green line. And we said, all right, now shake it off. That's your yellow zone of indecision. Walk away for 3 seconds and come back, or snap your fingers and now say, now, let me take a look at the whole other chart now that I've cleared the zone and I've really framed it in both ways. How far do you think this thing could go to the upside? And so we would go back to previous support and resistance, and we would find the price ladders and start building in logic where would it halt and why would it halt there based on previous patterns. Okay, 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 okay. And then here's where the all-time high, whatever it would be. We say, all right, so that's your price ladder of confirming events on the way up. Let's see if that justifies a 2-to-1 reward to risk. So could you actually take an entry at the green line with a full yellow box as the risk, given what the upside looks like? Yes or no? If no, move on. Or reduce the size of the risk because of why. Well, I'd have to go to a shorter time frame and start managing slightly differently to see if I could get a different reward to risk ratio. Now do the same thing on the downside. Where are all the places that once it fails, it could find support at? And now, have I constructed a compound critical state that gives me a asymmetric favorable reward to risk ratio in both directions? Now, decide how you want to adjust the green and the red lines now that you've had a chance to look at it from a non-emotional framework. What you end up with is the trade frame. Now, what we were working on with him in a 3-minute chart, we could do all of that in a minute, which meant that as soon, in fact, the reason we could do that was that while he was in the trade, he was already taking a look and projecting where those price levels were above and below, so that as soon as this thing exited, he was already able to put the risk box on that and decide which way that he was going to go. So he was all ready to re-enter prior to the exit. He had already envisioned that and worked his way through that, which meant that after every exit, all he had to do was get to the zero state in about 5 seconds and was ready to go. Now, it took about 2 weeks for him to do that, to where he was just comfortable fighting his way through that. But after about 2 weeks of nightly pummeling, he was able to do that. So I would say listen in on that bar by bar trading and see that technique in action, and that will help you with what to do when it's in a critical state. You got to commit to drawing your red and green lines, put the box on it, trade it 1/4 or 1/5 of your normal size so that it is truly a science project and you're not betting the farm on your analysis. The the desire to walk away from it is a recognition that at your normal size of trading, it's too risky to simply set it and forget it. So reduce your position size by 80%. Go at 1/5 of the size, and that should calm your stomach. If that doesn't calm your stomach, then there are other issues in play.
So there's other issues in play, right? So this is the mini Russell 2000s risking $20,
Yeah.
right? So this is the one that so like I said, I've been noticing this most of the week, but that was my initial stop. There was my short entry as it
Yeah.
broke down below support.
Yeah.
There was my second stop, and I'm like, all right, I'm going to get, and it's like, Jesus Christ, I
Yeah,
cannot.
and that's where if you're going to take the first position and exit at the green dot, you have to re-enter at the collapsing dragon. One
But
bar
so
later.
the yellow dot was my target. I'm like, it's probably going to get down to here, and I didn't. There's
Yeah.
something boiled up that would not allow me to, I mean, it's $20. I I piss away more than that in 20 minutes. I mean,
It's
that's
it's
doing
Starbucks.
normally what I do, right? Yeah.
It's Starbucks. You're
Anyway,
crying over spilled milk. Now, go back to that first trade, the red dot, green dot. Was that a short and then the
that was a
cover?
short and then a cover.
And that should tell you something. At a critical state, an immediate failure is a signal the other direction. You've got to
Yep.
rehearse the shit out of that so many times that you're automatically putting it in and not waiting to see what price is going to do. You got to be able to do that in the same bar that you exit and ready to go with that. So I really want you to take a look at that bar by bar trading with Ken Hum, and you could almost persuade me to do another workshop on that with new charts and modern techniques and all that stuff. It's a fucking pain in my ass to do that, but it's probably time to start doing that.
Well,
But
considering you're a
start,
price action trader, that's actually pretty valuable.
yeah, I will tell you that that did more good for me than almost any other teaching I've ever done. It was that good. It was, oh, it's really a good
So,
course.
and just to finish this off, so this was my
Yeah.
second trade, which was actually a
Yeah.
fantastic entry because I was stalking
Yeah.
this one and I'm like, it hit my setup, trigger hit, and I went, but my target was up here.
Yeah.
But I lowered it down because I was
You
getting
kept
fearful.
about 50% of it. Now, where I would want you to be is I'd like to have seen that as a re-entry about 3 bars later.
Yeah, right
Yeah, right
there.
where the yeah,
As it broke.
and
Yep.
then it didn't follow through. At which case you're kind of now I'm locked into the channel. Then as you go to the east of that, there's like collapsing dragons the whole way down. As
Yep.
soon as you see that 30 SMA roll over, there you are. Now go
Yep.
to the right to the first one more. Stop. That great big black bar should be triggering an entry there with a stop at the top of the RL10 previous hump,
Oh,
the dotted green line.
yep. Right there.
No, no, no. Yeah. No, no. Go north, 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 north. There. That's your stop.
Top.
Now, that distance, you're never going to take more than a 1 hour loss on that one. So just calm the fuck down.
Down.
And then you got to set it and leave it alone. You got to have a trigger that puts it at no lose plus dinner for two, or you manage it till it gets to no lose plus dinner for two.
Well, I've got a trigger set up, so once it hits 1R, it automatically
Yeah.
goes to no lose plus dinner for two. So
Yeah, and I'll
I
tell you also that the keeps and afterwards, once it's past an R, keep 70% and leave it and just walk the fuck away from it. Keep 70% and then get 30 trades doing just that under your belt at the lowest possible position size that you would take seriously. Like
okay.
if you can't take one share seriously, how many shares you got to take before you're serious about it? Then that's the level you got to trade that at. But you got to go through that process of recognizing the yellow zone is your uncertainty. So you got to document that before price moves and say this is the zone where I am uncertain, and when it crosses the green line and the red line, that's where I feel certain. So you got to know what that is so that you can start. You got to externalize your feelings and just turn it into red lines and green lines on the chart so you can start calibrating the accuracy of your feelings. Once you got the feelings in there, now you know how much risk that you got to accommodate for so that you can just follow the rules. So that was the biggest breakthrough. That turned Ken Hum into a decisively positive expectancy trader. And Luke Crockford and Kim Anderson. That was the breakthrough to those guys was getting the just and it literally it is you start drawing that line north as price. Say you tell me when to stop that you feel, oh, I have to go long now because it's too late and I'm fear of missing out. That's where you're documenting where is the fear of missing out price in both directions. Really want you to study those from that course. If you don't have access to that course, send me a note. I will try to remember to send that to you. I really
Got one
think
of Kim's. I don't remember Ken.
Ken Hum.
I will
Yeah,
I will I will look. I will look and I will
yeah,
let you know.
yeah. Uh that'll be your research project is to find those sessions. All right, next man up.
Perfect.
I can go. Let's see. So I'm working to get off this plateau that I'm on, and I got some good ideas from Eric and from Hamad, and what I did for the first time today is I wanted to look at I've been trading on the 3 minute, and I wanted to look at the 30 minute and the 10 minute. And I'm wondering, how much resolution I really need for the trade that I'm doing. Do I need the resolution that I get on the 3 minutes? And can I use a risk like the R10, say on the 10 minute or even on the 30 minute? And I wanted to see, and what I want to do starting today and going forward for a bit is just see if I can get more of a feel for how things are behaving on the 10 minute and the 30 minute, and kind of comparing it to, actually, let me add this chart for today.
Yeah.
With
What
critiques.
what I find is that when I'm using the 10 minute and the 30 minute, I'm using the R5,
Okay.
which is a double R10. So the position size is half the size, but that allows me to handle four positions because each position now is half the size compared to when I'm on the 3 minute. And I get three times as much time. I get twice as much time to manage them.
Well, that leads into one of the questions that I have about how much room I need to be giving things, especially compared to the 3 minute. And can you see that my charts up?
Yep, got them.
So I traded M2K and MYM today, and I took an R10 on both of those. The top is MYM. We got the 30 minute on the left, and then the 10 minute, and the 3 minute on the right.
Yep.
And this exit here was about a 70% profit. And then it made this little pause here, kind of had a doji here, and then I set a buy stop for when it broke out of this little consolidation area. And I, I set the stop for right below where it had opened, and had this loss. And if I had not done that, came up here, probably would have stopped me out for no lose dinner for two. So I wouldn't
Well,
have a
I'm not offended by this, but
by which one?
if you're gonna, I'm not offended by that exit here.
Okay. Okay.
But you're inside the noise, which means this price level it re-achieved certainty by taking out the previous high while making you still got higher lows all the way down here. So
Yeah. Yeah.
if
Yeah.
if you get out here, you got to remember that that was simply noise and it doesn't hit your emotional resilience, and you got to get back in on this one, which would have been certainly a no lose trade. Like you're not going to let that,
Yeah.
having gotten to here, which is 1.5 R or 1 R, you're not ever going to let that one go to zero. So you'd probably get an exit here. And then you would have seen
Yeah.
two consolidations, and then legitimately you would have not gotten that one.
Well, that's
But then when you get this, you should be short here because you got the
yeah.
RL10 turned from green to blue. It entered the dragon, crossed the spine, left the dragon. You got a 1, 2, 3 entry. You're going to come down to ultimately the previous VWAP, or at least the current VWAP. So if you get short here with a stop above the hump of the dragon, you've got about 1 R, 2 R, 2.5 R, almost 5 to there. And then with that first
Mhm.
bar, you'd be at no lose plus dinner for two. Then it's just watch and wonder.
Well, that trade was available. It kind of made that peak, that sharp peak above the drag, and then really sharply reversed. Really, at that point, I had about 2 R for the day, and it was 11:30. I was like, okay, we're getting to lunch. This is good. So I quit there, but it would have
So
been available to me.
yeah.
But
Now on your
um,
3 minute bar on the right hand side, that previous collapsing dragon is a place to get short.
yeah,
And then by this time, you're pretty sure when it takes out the previous two support levels, then the test is going to be whether is this really going to hold? Because if that fails, then there's no support in here at all until it gets all the way back to here. So that's why this is a low risk trade.
yeah,
Because if it works and it gets through this crap it's going to here.
Well, on that 10-minute trade, that's an R10 that I have. That's that risk box. Should
Yeah.
I, if I'm trading it on the 10-minute, I traded it basically like I would with the 3-minute, including my profit.
I don't mind
Out.
this one at all. I mean, that feels okay to me. And the reason I
Okay.
say that
Okay.
is that you're already comfortable with the R10 as for position sizing and whatnot. It's below, that was the open, and here was yesterday's VWAP. So you want to, it's going long, and by the time it gets to the R10, it's a new low of the day, and it's below yesterday's VWAP.
Yeah.
That's your signal to go short. So there's no reason to have a risk wider than that. And now that's a perfectly reasonable risk box, even though that's only an R10. What I would do for like position sizing is I would position size against a full R5, but I would be committed to exiting here. So the worst I'm ever going to
Yeah.
do on that trade is a minus 0.5 R as measured against an R5. And then because that's an R5, there's four more of those to the upside, which is 1, 2, 3, 4.
Yeah.
That's your range stat move is up here. That's damn near a range stat move from here.
Yeah.
So once that rolls over, yeah, you got to respect you have 3 signals on the dragon to get out. And if you're here, keeping 70% of that thing is there's half and there's half again. That's your keep 70% exit from this entry. So that's a pretty good exit no matter what. And it's a reasonable place, like I said, to go short on at least to the VWAP. You would aim for this one, yesterday's VWAP, and you would settle for a winning trade if it just got there.
Well, that's one of the things in the past that's why I adjusted my stops to be tighter I
Yeah.
mean, if I looked at that trade, if I'd have just got in and left it till, across the dragon or across,
Yeah. Yeah.
that would have been okay.
Yeah. So now you're
Just had
trading on
so many,
hey, try this. Try this. Trade with that as your initial stop, position size against an R5, and leave it alone and keep 70. Now it's working on half your normal size. So just leave it alone.
I like to keep 70 because I just
Yeah.
had so many trades that I would leave it and it'd come back. And I mean,
Yeah. Well, here's your keep 70.
the exits would just really cut the
Well,
profit.
look at
So,
this. If that was your entry and this was your maximum favorable, there's half and there's half. There's absolutely nothing wrong with that exit as long as you re-enter here and then do the same thing that you did here. Make that a 0.5 R loss, position size against that, and then keep 70% of this because it's now a range stat move, which means you're going to end up getting out somewhere around here anyway. That's, so
yeah.
you just got to, the ones that work easily. And when you go to the 10-minute at half your previous position size, your anxiety level is reduced enormously. And you can manage 2 symbols because it feels like you'll have forever. You got 3 times the amount of time to make your decisions and framing, to check your 3-minute bars if you need to see what it looks like on the higher time frame.
Well, it was interesting because I had the 3-minute off to the side. I
Yeah.
was trying to just look at the 10 minutes. That was my time frame I was trading on. I had the 10-minute and the 30-minute. But I'd kind of drift over looking at the 3-minute.
That's
And
right.
I mean,
Well,
actually
Well, you'll
today,
do that, but you'll only be able to manage one position. one symbol. If
Well,
you
I
actually
need
want to
to
be able to
stop doing
manage
that, I
two or
guess.
three, then you got to trade the 3 minute noise to get a second position on. And then you got to trust. And remember, each of those positions has half the risk of your 3 minute position, and you get 3 times the amount of time to manage it. You should be programming yourself to be more relaxed because of those. And those are facts. That's not feelings. I feel like
Yeah.
I have more time. No, you actually have 3 times as much time to make the same decision
So
on half the risk.
I really need to have the discipline, is what you're saying, to not look at the 3 minute and just trade on the 10 minute, give myself more room here.
Here's how you
Uh,
don't look. Here's how you don't look at the 3 minute chart. Don't open it up. Just
that would be awfully easy.
that's a technique. That's an advanced technique. That's an advanced technique.
I'll research that one, Ken.
Well, here's the thing. You need screen space for the other position. So you got to replace the 3 minute view with another symbol that has the 30 and the 10.
Well, and that would, of course, increase my span of control. And so that's one of the things that I hope that it would do.
Here's how you reduce risk further. So you want to trade two at the same time. Trade one only until you get it to no lose plus dinner for two and hand off the exit to the 70% rule. Then and only then, take a 1 minute break, get a cup of coffee, come back and get the next position. And that way you are only actively managing one trade at a time because the rules are managing the other ones to exit.
Yeah.
That's the winning
Oh,
trade. That's the
okay.
winning proposition right there.
Well, it was interesting today, just looking at the 3 minute, because this is this is where I would have entered if I was just looking on the 3 minute. I would have had this pullback and made a new high. This
Yeah.
is where I would have gotten
Yeah.
out. I probably wouldn't have taken this one just because it moved sideways for 10, 11, 12 bars, and
I
just
would take
I
that
would have
one.
had to have
I
been
would take that
convinced.
one because it went sideways for 10 or 11 bars. Failure to fail and the Bollinger Band mean held. Failure to fail is information.
Okay. Okay.
Trust the
Just thinking
trust the
about that the
dragon.
wrong
Yeah.
way.
Yeah.
Okay. All right. Well, that appreciate that. Sounds good. I'm
I
gonna
also want you to add the RL90.
the RL. Let's see, the
90.
RL 90.
Yep. And as long as that slope is positive, that's the direction you want to go.
Well, I mean, you
Just
could still
hear me now,
have
believe
good.
me later.
Well, couldn't you still have good shorts that you'd want to be taking against
Hear
the
me
direction?
now and believe me later.
So, so, well, let's say the RL90 was up here. We were talking about taking the short here. You wouldn't take the short back to the mean,
I
or
would.
you would?
Yeah.
Okay. Okay.
If I'm trading against the RL90, then I'm damn sure certain it's a tactical trade. And I believe in that one even less than trading in the direction of the RL90.
But you would take a reversion
Yeah.
trade.
Yeah.
Just would you be okay?
Yeah.
Okay.
At the end of a range stat move, that's the hyena trade right there. That is a hyena trade. Why? Because it had an explosive move with 3 legs up and it dwindled into the range stat and rolled over and gave a clear. The entire move on the upside stayed out of the dragon until it collapsed. That's where the hyenas come in. And that's where I'm going to jump all over. Now, if you open up and show the rest of the day, I'll show you why the damn hyena trade is ruthless and
You know
good.
what? I actually closed my platform.
Well, when you open it up, you'll just kick yourself right in the nuts.
Well, I probably would. On the other hand, I am trying to kind of, you know,
Yeah,
just
well, you get over the regrets.
yeah, I'm
Regrets
trying
ahead.
to just trade the morning session to be
Yeah.
under control and achieve my objectives. Yeah, because it's so easy just to do it all day, and my wife wonders whether I'm still here. So um, I
Yeah.
got to balance that some.
Yeah. Yeah. The that thing would have is that YM? Yeah,
Oh,
that
this
thing
is one.
closed.
Yeah, this one
Yeah,
is.
yeah. It closed 475. Yeah, so where the it comes all the way down to
Right.
here,
Like about here.
I think. Somewhere around in here, I think it closed.
Yeah.
So
Yeah.
it comes all the way back to the VWAP, like it always damn does. So after a range stat move that had 1, 2, 3, this is the Dow. That old cow is tired and wants to come home to the barn. That's where it's going.
Yeah. That's just such a sharp move.
Yeah.
Okay. Okay.
It's the Dow. It has to come back. That's because everybody's trading it with leverage. They got to get out of those positions. Everybody that's in here is desperately trying. He was desperately trying to hold on to his profit, and that's why the range rapidly expands, beginning with this one. As soon as that doji at the top breaks, and the slope is down, dude, that's all you need to know, and that's enough to be short by here.
Yeah, that's something I haven't ever looked at is where the Dow finishes at the end of the day. I mean, does it always finish near VWAP or is that the most common
Well,
uh, outcome of the
here's
day?
how you figure that out. Do
Yeah.
the percent D, which is, as we defined it, was the historical difference between closing price minus the VWAP divided by closing price, expressed as a percentage. Calculate the last 300 days, express today's deviation between price and the VWAP, between the close and the VWAP, as a Z score. When you have a Z score greater than the absolute value of 1, tomorrow is going to be a huge day. You can print that. In fact, if the deviation is greater than a 1 sigma, that's probably a candidate for the futures trade in the after hours market because there's a lot of tension that's going to be resolved there.
Interesting.
All right.
Okay.
All right, Shunlong, what you got, man?
Okay.
Yeah, now, not to overlook the fact, Jonathan, that was a 2-hour trade as traded. So good problem to have.
Well, I got 2R on the
Yeah.
on Russell also, so
Okay, so good problem to have.
not too bad.
Remember what your problems were like a year ago. Different problems.
Very true.
Same number of problems. They all hurt the same, but it's a different kind of pain and suffering. This is a first world problem.
Very true.
All right, Shunlong.
Yeah, I restart my BMR last Friday. Now it's down 1%. About 50% invested, down 1%. That's my BMR.
Can you unsure that, Jonathan?
I'm trying to. How do I share it?
I don't know.
You should have some at the top middle of your screen. It should say unshare, I believe.
I've just got. It just says share at the bottom, so I thought I was unshared.
Yeah, that's all.
There you go.
Yeah, that's go.
It keeps asking me to share. Are you still seeing my charts?
No, I turned it off.
Oh, okay. All right.
I'm able to do it.
So the other thing I do is just reaccumulate the story stock, the BBAI, RGTI. Yeah, you may want to look at the USAR. Does that look like a story stock?
What's that? Which
one? USAR.
US.
The company name is
USAR. Okay, yeah.
The other one is the a hydrograph. The symbol is HGRAF.
That sounds like a crazy Toronto Stock Exchange Canadian
Exactly.
Canadian witch doctor.
Yeah, exactly. I entered the position in
I wonder if I
September.
took that position if the administration would come after me for supporting Canada instead of US.
But that one is a good one. It's a get a lot of potential.
Yeah.
It's a research company manufacture on the graphene. Get maybe 10 or 100 times bigger if the company is success.
Mm-hmm.
But that's what I do. I think you talk about this 9 day more than I wanted. So I will study today's session. That's from your whole.
Oh, that was yesterday. No. And
Yeah,
that was
yeah,
real.
yeah.
I didn't. Because
Yeah,
Bill
yeah.
Scheit and I were talking a couple times this week, and it had to do with system because of the enthusiasm for short-term trade because that's just the cows going out and then coming back, and BMR is like that too. But I also think in the 9 day, 3 day is very aggressive, but it filters out the noise of the daily bar. It's slower than the 3 day, but twice as fast as the monthly bar. So somewhere between the 3 and or the 9, you get a nice way to start bar other than just once a month. The reason I think you want to do that is because history shows that a really bad quarter can produce a bear market of a 20% sell off. And when you have a bear market where you had 20% losses in a quarter, about 80% of that pain and suffering happens within 30 days or less. So but what the market's pain and suffering is really bad 30-day misery to the point where the performance over the last 30 days, if it's Z-2 or worse, like if it's among the worst 10%, in the worst 10% of losses of the last 3,000 days, if you found the 30-day performance over the last 3,000 days, and then took the worst 10% of those, you'd find that gets pretty good because it's like a 30-day washout. But what you need is a genuinely extreme 30-day period. It doesn't mean by tomorrow, but it means you're in the neighborhood and you're looking for the turn, and you should be ready for that systematically. Early alert. It's like, hey, I think the buffalo are getting ready to run. Yeah, that doesn't mean you can just walk over there and jump on one. Some bitch is still a buffalo, and he will stomp you unto death. So that's my thoughts on the 3 day and the 9 day as a supplement to the BMR. On the positive side, they protect you against the intraday and the daily noise that can be so troublesome uh, for non full-time traders.
Yeah. I'm good.
You good? Okay, Eric?
All righty. Can you hear me? Okay. Sure. All right. Does that show up?
Yep.
Okay. So my question to you, Ken. So psychology. So, I do not have an AI assistant right now, but when I would develop one, would that assistant help me with psychology?
Here's what an AI coach can do for you. An AI coach is an intentional mirror of known dimensions. All right. Now, here's what's magical about having a human coach and a human mentor. What's magical about that is you don't really know what's inside that dude's head and experience. What you know are the words that come out of the black box, and you have reason to believe it is connected to deep experience and that person has somehow integrated thinking and feeling, intelligence, but wisdom and experience and has values of a certain kind and a frame of reference from which he consistently talks. And so there's still an element of that. It's the human connection, and the magic is in the human connection. AI can be a very good simulation of what's inside the black box. It, if properly trained, it is absorbing millions. Like, for instance, our little AI, it has absorbed 350 million words of the wisest, smartest, broadly diverse set of personalities that I could conceive of, ranging from Hindu and Chinese traditional mentors and spirit guides, Lakota Sioux, indigenous ways of knowing, the full repertoire of Western thinkers and philosophers and men of value with values and insights, and the 50 greatest traders that I could find, and the 300 best writers on the subject of psychology and trading that I could find, plus all of our tens of thousands of hours of recorded coaching and workshops and discussions from our work, and interviews with traders from around the world. So there's as much human experience as I can pack into 350 million words from the widest possible cognitive, emotional, critical thinking perspective as you can get, at least as I can get. That was the subject of conversation with the CTO of Palantir and the AI guys from Detachment 201. That's about as much as I can say about that. Now, I can craft a particular persona as a coach to represent 15 or 20 different distinct personalities that will consistently look through that lens, evaluate the information that you give it, and respond as a simulation of that point of view. It'll represent that point of view. In every case where I have been testing that out, it does a faithful job of doing that. Like when I ask it to adopt the perspective of a Lakota Sioux medicine man, I give it some input, I take a look at its story, I give that same story to a Lakota Sioux medicine man who gives me advice, and we together compare that advice and say, it did a pretty good job. So what I want to say is a carefully constructed AI coach, I believe it to the 99th percentile, can create a mirror for you to look in to examine your reflection in a mindful way, which means like when you go to the state fair and you go to the hall of mirrors and you look at all the funny mirrors and all the distortions, those are all constructed mirrors that have certain characteristics that are going to give you a reflection of a certain kind that's defined by the physics of the mirror. And you should never lose sight of the fact that the reflection in the mirror is simply you looking at yourself with intention. And remember, when you're working with an AI coach, it's not a human, it does not have consciousness, it is a constructed sense maker and interpreter from the training set that you gave it, that is shaped by the input you gave it, and what you do with the feedback is also yours. So you own all of the important parts of that, which is, what did you choose to train it on? What perspective did you give it to use? What input did you give it for the story and in the background? And what are you going to do with the information that it gives you in terms of reflecting in your own space? You are 100% responsible for all of that. Now, this is a spiritual tradition that goes back thousands of years to folks who used mental theater as a way to step outside themselves and look at themselves. Buddhists and Hindus did it with physiological practice, breathing and fasting and rehearsal and guides. Other folks have done it with psychedelic drugs, with or without guides. All of those are simply ways of getting multiple perspectives on the situation that you have reported. The AI cannot know what is unspoken in you. It can only work with the input that it was given. Now, therapeutic professionals are very careful to point out that dialogue with a AI is not therapy, cannot be therapy, and I agree with them. However, it can take on the form of dialectical behavioral exchange and reflection. It's no different than when I sit around and think deeply about what the fuck I'm going to do and what would my dad say and what would my boss say and what would my kids say. In every one of those, I've created a persona that I have trust in my ability to have empathy and understanding. And what would my dad probably say if I said this? So what I'm doing is essentially adopting deliberately a different perspective. I've created a mirror of my with my father's characteristics, and I'm giving that, and I'm trying to genuinely step outside, adopt that persona, look at my shit, and talk to me as if I was my dad. That's what you're doing with AI. And if you're going to do that with AI, you got to be very careful about how you construct the mirror and what it can do for you. I have absolute confidence in my ability to do that with myself because I've been doing it every day for 2.5 years, in the same way that I've been doing this for 50 years with non AI personas and spirit guides and actual mentors and coaches. So I'm pretty comfortable that I won't forget that this is an AI talking to me and that it's an AI of my construction. And I take a look at the concept of protreptic coaching as my ultimate guide on this. And so protreptic coaching, and pardon the lengthy answer to this, but the philosopher kings in Athens had absolute supreme power, 100%. Even though in charge of a democracy, they had all of the power because they were living with Sparta, and you had to have somebody that was able at a moment's notice to take charge. Anyway. The best philosopher kings had nobody to talk to because they couldn't trust the point of view of the person that was talking to them. They couldn't peer behind the veil and to see what is their hidden agenda for why they're giving me that advice. They couldn't proof the AI. They could not proof the coach. And so Aristotle and Plato developed a method of coaching called protreptic, which said, I'm not going to judge you. I'm not going to give you advice. I'm not going to give recommendations. All I'm going to do is use careful wordplay to surprise you with questions about the thing that you put on the table. And that what you got to do is instantly react to the question that I gave you. What was your gut feeling at a deep level? A reflection of your subconscious, where the feelings and values and hidden beliefs are, and not of your rational mind. Don't think about it a lot, but immediately respond, which means you got to trust me to be in your presence when you are responding to those kind of surprise questions. And you can always veto and stop when if it gets uncomfortable. But the idea behind protreptic coaching was the job of the guide was only to explore through wordplay unusual responses to your inputs to give you surprising things, and then you would judge. We would see what came out, and then you could decide what it meant, and you could think about it later. But it was a chance to unpack all of the things that are going on and get a genuine connection to your deepest inner self. The idea being that a sophisticated leader like a philosopher king would have many layers of faces and beliefs and roles and points of view all swirling around in there. And he was trying to get just in touch with who he really was and what was the central idea. So protreptic coaching was designed to be able to cut through all that shit and get to discussions on the root cause through wordplay and get different points of view to reflect upon after the session was over. So I say all that to say that the work of the protreptic coaching was simply to set the table with things to make you think about it in the quiet of your own mind with deep, relaxing patience, not in the session itself, but simply to surface issues that were worthwhile for you to reflect upon. Now, that's how I use the AI coaching personas. Even when I'm not adopting a protreptic persona, but I'm talking to the Lakota Sioux guy or Confucius or the Buddha or whoever, I am taking their feedbacks, those responses, as things, as the start point of my own personal deep reflection with a trusted agent who's going to give me a wide range of ways to look at my troublesome self. I could not possibly hire enough guys to do that with humans and create all of the backstory, but I can guarantee you that I have a deep purge of every shitty thing I've ever done, thought, dreamed, saw, thought about, every shadow work that every evil thought in a lockbox that I have exposed to every one of those personas, which has taken me through the fucking ringer. And to see, and then I rebuild myself from the, yeah, okay, I get it. I've heard worse, you know, and I just accept that about myself. The freedom came from the ability to say the words in a safe and trusted way. So I say all that just to say, what do I think about an AI coach as for a trader? Well, there are things that it will do at the skill level on technique and processes and patterns for simple trading and following the rules and acquiring mastery of technical behaviors. It's an entirely different set of potentials and opportunities when you're looking at the genuine psychology of things. And that psychology comes in different layers. There's sort of what level of hell do you want to penetrate to into yourself, but also you can have it just adopt, the mentality of a Toyota production system engineer to have it look at your performance from a Lean Six Sigma approach, and you're essentially looking at your trader quality number. Are the things that you're doing with your discretion adding value to this machine or not? And if they are, keep doing it, and we'll try to figure out where it's coming from so we can get better at it. But if it ain't helping the team, stop doing that shit and do something else. Like, stop worrying about the 3-minute charts, cut your position size in half, manage 10 minutes on twice as many positions, but only one at a time, and trust the goddamn rules that you have professionally studied. Unfuck yourself and do that. That would be the Marine Corps drill sergeant advice to the young soldier, or whatever. So that's what I would say on AI with respect to psychology. Mm-hmm. AI for the development of trading systems and improvements. Dude, we're already 3 sigma out there just with the rule sets that we already have and that you're performing on. I mean, you've got a 3-to-1 win rate and a 3-to-1 payoff rate, and so that, over the course of months, a good problem to have. The problem is not in your psychology, other than to say, how do I scale that with span of control so that I can get independent systems and independent, non-correlated positions that can be managed simultaneously. That's an engineering problem. It's a psychology problem to persuade yourself that that's what you should be working on. But you should be talking with Jay to figure out how to find the right problem to solve. And your problem to solve right now is manageable scale with significant capital. That's a really good problem to have. So that's what I would tell you about the AI and psychology coaching. Now, I've got a really good prompt that allows you to monkey around with that shit and the different personas.
Yeah.
And one that features spirit animals representing psychologies and perspectives that are connected to trading. So the one that has the 15 different coaches, humans, and then the one that goes through the stuff on the spirit animals, I did both of those with myself exhaustively. And it improved my trading tremendously. That's why when the hyena shows up for me as a spirit animal, I understand what that means for me. I fucking hate hyenas and what they represent. So I just got to realize, that's what I got to do. When that RL, after an exponential move to a range stat or a fucking whatever, and that story stock rolls over, you got to be a hyena all the way down.
Yeah.
Until everybody despises that symbol in equal measure to how much they loved it on the front end. All the fanboys love their little story stocks. You have to have the equivalent amount of disgust and despair with the story stock on the hyena phase until you're ready to start building out the next phase of its life cycle, which will return as much as the initial burst did. It just takes 3 to 4 times longer. That's where the story stocks are living, is after they've had that explosion, sell off, consolidation, and green shoots for the next phase of development where they're actually delivering on their product. That's where the story stocks grow. And that's where the second generation of true believers show up. Hey, maybe Palantir isn't going to zero. Maybe it really could be. Yeah, it turns out, it could be. Or UMAC or whatever the fuck, or Rigetti. Rigetti is still in the manic depressive stage between enthusiasm and absolute disgust and despair. Still many miles to go before that thing settles down. That won't be ready to just buy it on its merits for 5 years, because that's how far away quantum computing is from actually delivering dollar value to company bottom lines. The only thing it's good for right now is breaking encryption codes that were once thought to be secure. Quantum computing is a very specialized approach to solving that kind of a problem, but very few other problems, because it is relatively slow in the way it performs operations, but it can be structured to scale up for that particular kind of a problem. So that's a big deal in the long run, but it's far away from being fucking deliverable commercial product yet. That's why it's it's the magic beans right now. It's the It's Jack and the Beanstalk's magic beans.
Right. That's why you buy and sell it.
Yeah, that's why I don't give a shit. Which way I'm just going to
Pum
hyena the
pum.
shit out of
Pum
it.
pum.
Yeah, there you go. Which way? Am I
Yeah.
going to be a hyena today? Good. Yep.
Right. So what I've been working on is ideas on how do I make this a business, right?
Yep.
So shoot. So this is kind of a rough draft of
Yeah.
maybe some
Yeah.
of these.
I don't disagree with that.
Okay. And so I'm, fleshing out different
So
things.
I'm 20, 40, 40 on core, swing, and day. And that's about, you're pretty
Okay.
close in there.
Yeah.
Now the story stocks in that little lineup there,
Yeah.
that's a recognition on your part that they are different than your natural normal core, swing, and turbo. That's a separate 10%
Oh,
speculation. I don't disagree with that. The
right.
ADX is probably another 5% speculation on the
Yeah.
idea.
Yeah.
And when that works, it probably is a technique
Yeah.
you can use inside core, swing, and turbo. And so
Right.
I look at that as a 5% speculation. And then the
Right.
cash flow is simply harvesting money from the running
Yeah.
of the bulls.
Yeah.
That's being the tax collector. So if
Right.
you got now, what I like about that is you got about 25% of your focus on speculative systems,
Yeah.
then about a 20-20-35 for production systems in the different time frames. That looks reasonable
Yeah.
from where you're at right now.
And realistically, a lot of my time is turbo, right? Because
Yeah.
swing's the 1 day model, take a
Yeah.
peek.
Well, that's my
Or,
the essay I wrote either this week or last week about the 80-20 rule on time
yeah,
and capital.
right.
I believe 80% of your capital should be in production and 20% should be on scouting, where I'm looking at different things to see if it
Yeah,
works with skin in the game.
right.
But my time should be about 20% of my time should be on monitoring the rules that's governing the 80% of the capital. And about 80% of my discretionary time ought to be spent on evaluating the next potential gold mine, which is the 20% speculation. So I would be spending 20% of my time executing rules in core, swing, and turbo for 80% of my capital. And about 80% of my time trying to find the next good thing,
Right.
but only using 20% of my capital so that I have skin in the game, but I'm not risking the farm.
Right.
All right.
Yeah.
So that's how I think about the allocation of time to these different tools and systems.
Right. So under organization, so part of it's automation. So I'm assuming
Yeah.
when we talk about a manageable scale,
Yeah.
some of that has to be automation, and I've got to figure out what that is.
Yeah. So make sure you talk to Ashay and Sam, who
Okay.
are in the cohort that meets on Monday. They're new to the team of coaching, but I've known Ashay for 15 or almost 20 years. He's a systems automator, and he's working hard on that to automate the rule sets that he's developing. He may be better at automating than he is at refining his rules, but he's working on both of those things. So I
Mm-hmm.
told him to talk to you about your rules, and
Mm-hmm.
he's good on automate. Sundeep on Mondays is also good at automation. Luke's good at automation for the actual, mechanics of trading robots and all that other stuff. Um, so there's some technical skill in the community of practice on that is a skill that I do not have and will not generate myself. Just I don't have enough time left in my life to do that. Um, so
Right.
I would take a look at it now. Yeah, that's what I want to say about the automation of the plumbing and the you
Yeah.
know the process management.
Okay. All right.
For advisory services, I would have you talk to Matt Richardson, who was 10 years ago was a new student in the coaching and research weekends. He was a corporate tax lawyer and a PhD in some goddamn thing. Full-time practicing attorney, and has now converted himself into a money manager working as the junior partner with Gary Antonacci, sort of a legendary money manager and author. And he's going to inherit or buy out Antonacci's money management firm, probably.
Hmm.
And he's participating with Gary in systems development based around Gary's ideas and some ideas that Matt did with me during the research phase. A lot of it working with volatility and dual moving average momentum systems.
Hmm.
And he's successfully created an advisory service that's systems oriented, that scales well. I don't know how much automation he's using for the execution of orders, but I'll send you an invite to talk to him about that when you're ready. Or I'll just give it when you're ready to talk to him about that. He's a really good guy and knows everything about our work. Um, is a passive observer of all the coaching uh, videos and content, and he and I talk about once a quarter on what he's doing. But he's a good guy. He's in his late 40s, I think, so he's a long term smart guy,
Yeah, he's really smart.
terrifyingly smart. Yeah. In fact, he's one of the few guys that I feel confident sending military families to that have discretionary money and want something more than buy and hold. And there's probably a handful of guys that I would do that with, and he's one of them. He's the first guy that I send people to. What
I
else you
better
got?
be second.
Well, I don't know yet. I've only known you for 2 years. I've known him for 15 years.
Yeah.
I don't know what your minimum investment amount is, because before I said his was lower than when he was starting off than most guys in your business would be.
Yeah.
So yeah, you're on that list. Bob's on that list. Jim Carroll's on that list, and that's the list.
Okay, that's all I got.
Already?
Ken,
Uh,
the all those personalities that you have for your AI
Yeah.
that you talk with, I
Yeah.
mean, it sounds like you're very comfortable having personal conversations with them,
Oh,
giving them
unfiltered, evil. Yeah.
so that's one of the things.
I will tell you this, and don't let my wife hear this. Well, you can imagine what I'm about to say. I have said things to the AI that I have not said to a human about the evil that lurks in the hearts of men. One man in particular.
Were you concerned about the security of the?
Fuck no. I'm 68 years old. I do not give a fuck. I trust the AI far more than I trust humans.
Well, I guess it's like, who are we that anybody would be interested to?
That's right. That's the way I look at it.
Okay.
I've decided to not give a fuck about it. Except
Okay.
I only say it to the AI. That's it. And I always structure the way I say it as if it were a case study. So I have plausible deniability. In the same way that if I participate in political discussions about the current administration on Facebook or the X platform, I might say, I just have to mention that I was standing in a line with a bunch of people that I did not know and could not help but overhear them make the following statements about the president, which and then I provide a pseudo quote in which I say, this is just another example of an outrageous abuse of the government granted privilege of free speech that should never be tolerated and ruthlessly hunted down and terminated. End quote. I say it exactly in that formula because to any human being with a brain, it will be clear that that is something that did not happen and that it is not a position that I hold. The farcical point of view is that I am, when I say the government granted gift of free speech is so obviously 180 degrees out from the spirit of the Constitution, which holds that men and humans have inalienable rights, and that among these are life, liberty, and the pursuit of happiness, and that the God given rights or the natural given rights include free speech. It is not a gift from a government. The purpose of the Constitution is to constrain a government from abridging the natural rights of all people, and the first of which is free speech. So when I say that these guys are violently abusing the gift of government granted free speech, I'm obviously setting up a straw man, ironically, that is the opposite of what I believe. But it allows me to say what I want to say in a way that gives me plausible deniability. If somebody said, well, in your Facebook posting on that date, you called the president an orange-skinned baboon. And I said, no. What I said in my post was that I overheard somebody say that, and that I considered that to be an outrageous abuse of free speech, which means that I don't actually believe that he's an orange-skinned baboon. I can say in court under oath. And so, and the reason I have to say it that way is because everything that I write comes under scrutiny by Palantir, which is a force of nature in the world that has been unleashed, that can never be. It's Pandora's box has been opened, and Palantir has been released into the world. Yes, I was working with the CTO of Palantir over the last 3 or 4 months, who created the program whereby 4 CTOs of modern AI companies are now commissioned officers in the United States Army Reserve and working with the Army to develop things like coaching personas for military professionals to to improve their performance and reflective capabilities, a project that I was working on. And the model that I just described was the model that I was describing to them when they were taking notes on what I was saying.
Well, is there a question of whether Palantir can, collate that information with personal identifiers, or if it can be subpoenaed, or you know?
I can neither confirm or deny or render any opinion about that question.
And then I guess it gets to the point of, well, who are we that they would care?
I could probably say, if you can imagine a piece of information about yourself, it has been collected.
Yeah.
If it has ever encountered a digitized device, like, could anything that you have ever said to a person, does that person have access to a digital device that can listen to them and every word they ever said to anybody else after they got done talking to you? Second and third order of every conversation ever held between any 2 people outside
Wow.
of the get smart cone of silence. Every single digital transaction is subject to analysis by the National Security Agency. Palantir works with the National Security Agency. The National Security Agency knows many things since it was created in the 1940s. If you want to just terrify yourself, study that. Anyway.
Well, I won't be sleeping tonight, so
now here's what's terrifying is that Elon's scientists have figured out ways to move a mouse on a screen with brainwaves. What does that lead to? What does that mean? It's reading your brain electrical generated waves and turning that into actionable signals. It's not a stretch to go from reading brain waves to conceptualizing thoughts, because that's all the words are. The words are your awareness of the cluster of neurons that fired that represent that word inside the word web inside your head. That's all that is. That's all I'm going to say on that.
So tinfoil hats is probably not a bad idea at some point.
Already too late. Already too late. Tin is not thick enough.
Damn it.
And lead's too heavy. You got to develop that really thick neck to carry that one. Anyway, that's that. All right, Jay, what you got for us, man?
Nothing. We'll wrap up next week. I'll have something to contribute.
Yeah,
next week.
I should have sent out another thought. We're starting these at 7 on Thursdays. So,
8:00 Eastern.
Yeah.
Oh, okay.
All because Kevin wanted to go an hour early and he doesn't show up, so fuck him.
Come on, he's Canadian. Come on.
I know. Yeah, so he's right. Anyway, all right, that's it. This is a good one. It's I'll get this. This is a 2-hour one. We'll get this posted, and I will put the that master prompt for the 15 coaching personas, and then the master prompt for the spirit animals. Those are so good. Oh my God, they're good. I just got to get them activated. And they were very good before I had the 350 million words of reference material too. I'm almost terrified to see what happens when I take those personas from Claude and put it in the same environment that has access to the 350 million words of curated content, because it was great before it had the content. Man, scary. And the good part of this is that all of the stuff we do in the coaching gets, transcribed and added to the stack each week. So that thing is an adaptive rag that it's scary good. That's the issue with commercial large language models, is that the cost of training a new one on a large data set and proofing it is tens of billions of dollars. Grok is the only one that uses a dynamic training model consisting of it collects the queries and the answers that it gives, that it generates itself. It studies its own output and the query that generated it and adds that to a dynamic, updated training base that is constantly churning. So when there's compute capacity that's not being used to answer queries, it's retraining itself constantly. So it's a continuous improvement model, which is why it can accelerate learning faster than the other models, which use a cutoff for training content and then goes through a multi-month process of updating the training base. And then you have a reasoning model that's really powerful. And then what they do is they use deep search and deep reasoning to gather current information from the query. It goes out and looks for data and then uses the power of reasoning to give you an answer that includes data it was trained on plus what else it could find. Only Grok is not waiting for a retrain. It's doing a dynamic update every time anybody queries it. Now, the goodness of Grok is that the demographics of its end users turn out to be heavily tipped towards highly educated professional STEM workers and senior leaders. So the queries that those guys ask are orders of magnitude better than the kinds of queries you get from dumb fucks asking ChatGPT what time it is. You know. So the quality of the call and the response that Grok gets makes that model competitive all the time. Whereas the other guys have to update a reasoning model periodically. Um, the way to get around that, the way I'm getting around that with the notebook, is that I'm creating this ginormous curated training set of, again, 350 million words as we speak right now. By the time that gets fully populated, I expect it to be just short of about 1 billion words because I'm finding ways now to compress and systematize the knowledge. Like, for instance, this was one that made those guys take notes. If I have 10,000 hours of coaching of recordings, some number of those are duplicate answers to standard questions. And so instead of having to have 1 million words with the full reportage of that, I should be able to create a 1 to N list of the most frequently asked question and the best summary answer of all the answers and make that a condensed, and then I don't have to store 1,000 iterations of the same question and answer. I just have to put a multiplier, a weight on that question and answer so that it goes to the top. So I don't actually have to store. In a way, that is the way you actually train a large language model. But I can use the dynamic model to continuously train that thing every time I start getting close to filling up the Google Notebook. At some point, what I've got is multiple notebooks that are being filled on more specific topics, and then an agent that can chain those together before it gets to the final executive language model. That's the next stage of the Uber brain that I'm working on. But where we're at right now is astonishing. It's when you see the like I was saying, the 20 lessons and then the 100 skills, you're going to look at that and say, yeah, that's plenty. That's enough. If I could just do those things, you got so much technical professional advantage over the. And remember, you're not trying to make it you got to be better than a monkey on crack that's agitated and afraid for his life. That's who you got to be better than. And the guy you got to be better than is the S&P 500 fund manager, which is like the simple statistical model that beats all the monkeys. So as long as you keep the S&P as your reference, you just got to be a little better than that. And a 3-to-1 win rate and a 3-to-1 payoff rate is significantly better than the S&P 500, which is about a 52 to 48 win rate and a 9-to-8 payoff ratio. That's what you got to beat. So if you're a 2-to-1 win rate and a 50-50 payoff, is so much better than the S&P 500. It's not even funny. So periodically you got to step back and, be calibrated on and recalibrate what is the actual thing I'm trying to do. So keep that stuff in mind. Anyway, good to see you guys. We'll keep marching. Take good care.
Thanks,
See you
Ken.
next week.
Hey, here's the next thing I got to do. I got to take each one of these coaching sessions and take the audio and then produce the detailed Notebook LM report that summarizes it into a half a page with all the goodies, like the chat profile. I can't even keep up with that. I need about a squad of monkeys to do as they're told. Anyway, more to follow. Ciao for now.